like to reduce your tax bill? Let's be honest, we all would, and we are happy to learn of any way to do that, aren't we? So what we're talking about today is, can we do that using a car? And we're discussing whether it's best to buy a company car or whether maybe you should keep your personal vehicle and claim the mileage. So we're just going to run through the points for each option, and then at the end we'll hopefully work out what would be best for you. So the first option is claiming the mileage from the use of a personal vehicle. So that's you as a company director. So if it's a petrol or diesel vehicle, then you can claim 45p per mile of business use. That's not just any miles, but that is up to a maximum of 10,000 miles, and after that it drops to 25p per mile. If the vehicle's electric though, the claimable amount is only 4p per mile, although let's be honest, you have spent a lot less running it. And to be clear, the cost per mile is the only expense that you can then claim. The amount is high, that's much more than you spend on fuel per mile, and that is supposed to be to therefore cover any wear and tear that happens to the vehicle. So there's no repairs, no MOT costs, no new seat covers or new sound system, anything else that is allowed to go through the business. So the second option is giving an employee a company-owned vehicle. So in this case, the vehicle does become a taxable benefit, and that means that, from HMRC's point of view, they're saying you've given them that car in place of some money. So it does mean that P11Ds are needed at year end to report this benefit, and most likely the employee, as well as yourself, will have further payments to make to HMRC. This vehicle is obviously owned by the company, so that does mean that any costs incurred by it are payable by the company, and that's completely fine. However, an agreement must be drawn up if there's any personal usage allowed, and if there is, that will need to be reported as well as part of the taxable benefit. And the other option is you are a director of a company. What if you purchase the vehicle but put some expenses through the business? Well, that is fine. You can do that and you can be reimbursed by the company, but it does mean that the company can't use any capital allowances related to the purchase of the vehicle. And it does mean that, again, you need to keep track of the sort of split between your business and personal mileage. As again, any personal mileage is obviously not claimable through the business. So for example, if it was literally 50% business, 50% personal, then you would only claim back 50% of the cost, so 50% of the MOT, 50% of any repairs, etc. So there's the options. How do we know what's best? I guess the biggest factor really is working out how much of the vehicle usage is for business. If it's a relatively small amount, or even sort of maybe 50%, you're probably better off claiming the mileage, because it obviously does get tricky working out how much was personal, etc. Of course, if it's an electric vehicle, the claim is going to be very low, but that is a whole other discussion. And if it's going to be mostly business or wholly business, then it might well be worth purchasing it through the company. We know it's a big decision to purchase a vehicle, so if you would like to discuss things further with us, then as always, please do feel free to get in touch. Thank you, bye!